U.S. pre-open, and the tone is cautious. S&P futures are down, Nasdaq futures are lower, and Russell futures are softer too. The VIX is at 15.72, so there is a little more tension in the tape than the cash ETF screen suggests. Cash index funds are still holding modest gains. SPY up 2.1821%, QQQ up 0.269%, DIA up 0.2895%, and IWM up 0.2114%. But futures are not confirming that strength. ES is down 0.398%, UQ is down 0.3646%, and RTY is down 0.2256%. That gap is the first thing to watch into the open. Rates stay central. The U.S. 10-year yield is at 4.65, and the dollar index is 99.04. U.S. JPI is 159.8. URUSD is 1.669. And GBPU is 1.3616. That keeps the macro tone firm and puts pressure on duration-sensitive assets. Energy is the biggest cross-asset move. WTI crude is down 2.5012% to 80.3, and Brent is down 2.2688% to 85.29. The market is still watching Middle East and Hormuz-related developments, so crude can move quickly if headlines shift. Inflation is still the policy anchor. Core PCE is at 3.6%, PCE is at 3.7%, and Q2 GDP was unchanged at 1.5%. So the setup is clear. Firm rates, a stronger dollar, softer crude, and a mixed equity pre-open. Traders will be watching whether futures improve at the bell or whether the early weakness broadens out. The desk should separate fresh catalysts from background commentary and wait for market confirmation before upgrading a theme. If the same story keeps crossing without a broader move, it remains context rather than a new trading signal. If rates, the dollar, commodities and index futures begin to confirm the tape, the next brief should elevate that theme. Until then, the useful question is whether the headline flow changes positioning, liquidity, or the next scheduled risk window. This keeps the brief focused on evidence, not noise.